Okay, let's take a look at some of the ETF, for the indexes before the market open. We all know yesterday was a wild day, and the Dow went as low as went down as much as 460 point down, and also the S&P over 60 point. Then, after the beige book release, then later on in the afternoon, the market sort of came back quite a bit. Did a pretty nice reversal, and we're kind of expecting a bounce a little bit, but I did not expect it to come down as much as it did before we start to see a bounce. So a lot of these level that we talked about previously seems to be kind of overshoot those levels. So we're going to take a look at the spider, the Q, and also the Russell, the IWM, and kind of reassess what the what is the most likely scenario now. If we expect it to be a bounce. Previously we were talking about potential of head and shoulder, the bear flag, and those kind of stuff. So let's take a look at the spider. And originally, well, first of all, let's take a look at the weekly. And we can see this trend line here, it seems to be still in force, right? Because we haven't really broke through this trend line yet on a weekly basis. Okay, so right now still be kind of holding above that. Not saying that it won't or it will or whatever, but right now we just put that on there, just kind of like a reversal, toward the mean, that sort of thing, and it could be come down and test this trend line, and then it could bounce, right? Or it could just fall right to it. But in regardless, right now, let's focus on the daily. And we basically were looking at originally looking at this particular support level here somewhere around at this 191 area, and we're saying that before these drop here, we're saying that we might seeing maybe a little bit of a forming this little head and shoulder pattern. Right, so this is like the right shoulder. Then we get this, break of this neckline. Then we do a major move, and if we use let's go use the Fibonacci retracement tool, and we do a major move, 100% move, then it will bring it down to somewhere around, this particular level here near this 179, which is somewhere around this. These little pivot point here, or on a maybe on an 80% move, somewhere around this area here, about this 181. Right? So essentially, that's what we're looking at. Although yesterday it kind of traced down close to that 181. I think it came down to 183 or something like that. No, 182, whatever that is. Let me put up the data box and see what that low was. It was like 181.92, right? So, but it wasn't the way that we anticipate for it to come down, though. We were basically doing a major move of a head and shoulder that we expected to maybe come up to possibly to the 618 or to this 50% retracement point, which is the 195 or the 196. Then break this baseline, this neckline here, and we're thinking about this at least maybe a week or two of time frame for this thing to form before it breaks out, break down. So now that sort of that head and shoulder pattern is no longer in play, right? So and then now, so what's next? Okay, so let me get rid of some of these line here. Okay. So, and if we just, simply playing that Fibonacci retracement, saying this, going to this particular, retracement point, right, this 168, we also, this 161, we also kind of validated that already, because now we basically go and talk to about, getting down to this minus, 100% retracement, basically the minus 200 point, and that doesn't make too much of a sense, right? Because okay, in terms of Fibonacci retracement. So here's the scenario that I'm thinking about, the possibility. Still, it could be a bear flag in the making and that sort of thing. But, remember the H pattern that we talked about, right? So let's say this is the swing, and let's say right now in the near term, this is the low. So, and we're gonna, use this Fibonacci retracement, right? And we're saying we're gonna form this H pattern. right? Okay, so if for example, let's say it come down, come up and do this, right? So essentially what it does is it form this H pattern and break this. Okay, we've seen that before when we talk about the H pattern. It's basically it's a Fibonacci retracement type of deal. Right? So it came, so in this case, it's that we come up to the 618, which is 189, right? Or we could come up to this 191. It could also get back up to let's say come up to this 50% point, and then break this. Right? So essentially, it's this H pattern here that with the peak over here at this 191, and you also could look at it in terms of a price channel is coming down, right? To retrace down to this maybe 127 or the 141, which is 170, this 173, 174 area, or the 176. Okay, so that's the possibility, right? And if we are saying we're going to come up and attack this, 618, then again, you could also look at it, as this, this little price channel coming down, right? Okay, and depending how this thing trades out, it could also essentially form a, the bear flag that we're talking about, right? So it could do like this and then come down. So those are the possibility right now. Essentially, we are talking about maybe just playing out on this fib retracement, with the possibility of forming an H pattern and come down and tag this 127, extension, which is 176, or this 141, which is 173, and this, sort of coincide with this particular, support level here as well. So there's some confluence down there. So that's one possibility on the SPY. Okay, that's, so we might see maybe, in the coming day, the next day or even today, that we might see, maybe a little bit balance, right? Come up and, just, walk yourself up, to this, 189, and essentially it could come up and tag this, 191 area, right? Okay, just a little bit overshoot, right? Trying to get to that, this 50% point, which is the 192. So we could be looking at something like that, right? Okay, so that's for the SPY. And if we look at the Q, now the Q probably will get a little bit of a damage control today because of Netflix. Okay, the Netflix earning came out and it's really kind of clobbered that. And also Apple is having their product announcement today, so that's going to put in some volatility on the Nasdaq, the 100, and that will reflect on the Q. So depending which way Apple going to move based on their product announcement. But in regardless, let's take a look at the Q. So again, if let me remove these line here. And again, originally we were talking about that possibility of forming a head and shoulder, right, with this as a neckline, and then break the neckline and then come down and do a major move, and that sort of thing. So if we, again, using our Fibonacci retracement tool, and if we do a major move at this head and shoulder, presumably, we form a head and shoulder here, and come down. So do a 100% retracement. This major move would bring it down to somewhere around this 87, 88 level, somewhere in this vicinity here, right? Or if it get up to the 80% point, maybe somewhere around this level here. So between maybe 89, somewhere around there. But again, because of the last few days, it kind of broke through this level so sharply, right? So that head and shoulder pattern is no longer a possibility now. Right. So we can look back, same kind of play, for like we just went to for the spider. And if we, go and say, well, let's take a look at this, this swing using the Fibonacci retracement. Okay. So again, if we say this thing will sort of, retrace up here, get up to this 618 and then come back down, so we get this little bit of an H pattern. Right. So again, if we look at this 127 extension and the 141, So you can see some of these level here that could provide a potential support, for this H pattern, this, when it break through this 90 area here. Okay, so and that too is also, could set up, a little bit of a price channel for it to go work itself down if it comes down to this, 161. So, and depend on, how steep it's going to come up, on this retracement. Now, definitely we don't, most likely we probably won't see it to come up to this, 38.2 retracement level. If we do, then, remember we're still looking at this particular, scenario now, right? So maybe we get a little bit of a bull flag and then go up, okay? But right now we're essentially looking at, what would happen if the trend continued to go down? How are we going to see this little bounce here? Right, and that's basically what we're looking at, the possibility of doing this H pattern, right? Or maybe it could, come up here, right, and then break. So you essentially, you're getting this H pattern come down, and then you trace these, retrace using these Fibonacci extension. Okay, so that would be the Q, and then on the IWM, slightly different on the IWM because of the originally we said that, it had sort of formed this little head and shoulder or a trading band, if you like, right? And then we could, use this measure move, right? And that way on the 100% level, it kind of bring it down to this particular level here, which is around 94. And if we talking about maybe somewhere around the 80% level, that would probably be somewhere around this 97 area here. Okay, so right now, but also, see how, it came down. So if we were doing this particular swing as the Fibonacci retracement here, right? Let's say, here, okay, and it came down, broke through this level here, this 107. It tagged this 127 and it bounced. Okay, so let me do this. So again, if we also look at the possibility of a price channel, all right, let me take this out, and let me see what would be look like if we do this. Well, let me use the other tool here, so I don't have to eyeball the parallelism of the line. Okay, so if we do this, okay, so we could, be looking at, this price channel coming down, and at the same time, we could also, take a look at it using the Fibonacci retracement tool, and look at this H pattern again, using this particular H pattern and come up here. So you can see that it could be within this, the confine of this, 50% level, or within this, this price channel here. Right. So, okay. So if with if the price channel continue to come down and we break this level, this 103.65, and again, this 127 and 141, it seems to be tracking on this particular price channel coming down. Okay. So those are the possibility here. Basically looking, if we are getting a bounce, first level of resistance will be somewhere around here. Right. This 107. Okay, then the possibility of the next level resistance would be maybe the 618 at 109, and the 50% level, which would be the 110, 111, and it will be somewhere around this particular, support term resistance for the IWM. So basically, that's what I'm kind of looking at right now. And if it does, continue to come down, then we're probably looking at, somewhere around these level here for the next level of support, okay. So let's say it just come down here before it bounced, and we just move these, the Fibonacci retracement down, and most likely we probably will find a retracement level coincide with this 107, and maybe it will get an H pattern come up. So some of these levels is going to be one of those resistant area that will be the the turning point for that pivot, right? To make that turn to come back down. Okay, so basically that's some of the little messy line that I got there for all these little different level. So hopefully that will give you some idea of what to look for in the coming days as the market try to, get a little bit of you know, dead cat bounce for a little bit more sustaining period, other than maybe a 1 or 2 days. So, and at that point maybe give us a little opportunity also do a short-term swing long, but don't with a lot of caution, going on that because the trend is down. So you try to limit not to go into a long side of the trade as much as possible. But if it presents opportunity to take some long, then we'll take that opportunity. But it's just that, right now the market's still pretty uncertain and maybe choppy, so we got to be careful. And still, I think the safest way to play this market is not to play it at all. Just sit, move to the sideline and then let the dust settle a little bit more. Okay, so good luck on your trading today.